Gakuna Trading. Welcome back to another technical video. It's been a long time I did a technical video. Now I've been working on opening range breakouts and price action patterns and micro balance. When I talk about micro balance, I know most of you have seen my shorts videos talking about markets that goes out of balance, front side, back side. Now, to be very clear, we have, when we talk about front side, back side, okay, we have a market that has to build structure, and that structure has to move in three. It can be three higher closes front side, three lower closes front side, okay, reversal back side, whichever way, front side, back side. Either the market is working to the lows to reverse back to the other side on the back side, or working to the highs to reverse to the other side on the other side too. Now we have a structure like this. Now when I talk about market that goes out of balance, we put a horizontal line. This is the opening range we have here. Now a front side move looks like this. Now we have ranging days, but this is what front side, back side looks like. The market moves, okay, one, comes back inside, may close inside, may close in breakouts. Okay, one, it closes in breakouts. Let's assume it closes in breakouts. Okay, now we have what? Two, okay, breaking out of that other range. Okay, before you know what's happening, we have what? Three, that may still close in breakout and then collapse on the backside. Okay, so it can happen on a Wednesday, Thursday, reversal on Friday. It can be a Tuesday, Wednesday, Thursday, reversal. It can be a Monday, Tuesday, Wednesday. It can be a Wednesday, Thursday, Friday. It can be a Thursday, Friday, Monday. Front side, back side, all depends on the structure. How has the market built a structure for a 3-day setup, 3 days of breakout, 3 higher closes for that backside reversal, either to the downside or to the upside, if you are buying low or selling high. Okay, but within this structure, inside of that structure, on the final day, micro balance comes to play. How does price behave when the sessions open? Okay, Asia is the opening range, London is the initial balance, and then the US session continues the movement or will what? Reverse. But it has to do with how the market will open at the first hour, okay, and a breakout of that open. Okay, now the PDF for our micro balance structure, looking, when you see a 3-day setup, we have the rule book in check, we know what we should do, we know what we should see, but then we talk about micro balance. Now this is where most traders get fucked up at. Now when we look at this market, okay, this is an example of, okay, a front side move and a back side reversal, which is now an FRD close on Friday. Okay, now most times these reversals are very climatic. They drop massively back to the opening range of Monday. Okay, what I'm trying to do is this: I'm trying to make traders understand you can take a buy out of balance. It's a setup, okay, it's a guideline, it's a concept. If you can monitor the market every Tuesday for reversals to investigate the opposite extremes, which will begin our front side move towards the back side, you would be amazed by how magnificent these opportunities are. Okay, so front side, back side. Now you can also, those of you in the Discord, we saw this reversal on NZD card. Okay, we saw how the market went to the 4-hour moving average according to the rules. But when the market gets to the 4-hour EMA, what happens from there? The market may bounce off and continue that trend. Okay, now we look at the execution. This was the Aussie card. We'll talk about the Aussie card. This was the NZD card. Now if you look, zoom in on this chart, you see where I entered. Okay, you see this is the 1-hour chart. Now we must stay below the 1 hour moving average for strong selling pressure. Okay, they will pull back when the market breaks out of the moving average. They will pull back. Okay, they will pull back to test the moving average, giving traders an opportunity to sell at the average price. Okay, we want to sell at the average price, we want to buy at the average price. Okay, now traders get in, and then we had that continuation to the downside. Okay, the same thing occurred with the Aussie card, the signal I dropped in the community. Now you can see when they got to the daily EMA, I informed everybody to close. Okay, now you can see me marking up the structures of our opening range of Asia. Okay, remember when we get back to the 4-hour EMA, we can only continue below or bounce off and return to the opposite direction in line with that trend. Okay, so we want to make sure that we can identify the pattern. What do I mean by identify the pattern? This right here, okay, is 3 days of breakout traders in the market. Tuesday, Wednesday, Thursday, Friday triggered 3 days of longs. This is also 3 higher closes. I'll repeat myself again. 3 higher closes is our what? 3-day setups and 3 days of breakout traders in the market. That is the first higher close, second higher close, and the third higher close. I do not have to be on the daily. I can just use my 2-hour, 4-hour time frame, and I can identify this. So 3 higher closes, 3 days of breakout traders, signal to short the Aussie card to the 4-hour moving average, and also went further to the daily moving average. Okay, now that was where I told everybody to close that trade. But then we want to make sure if the market breaks out of Asia, they will pull back to test Asia low. Count the bars on pullbacks. Pullbacks will last only specific number of bars. It can be 2 bars on a 1-hour time frame. This is why I love the 1-hour time frame. I wait for pullbacks on the 1-hour time frame. They can give me 2 bars or 3 bars before the continuation of that market to the downside. This now has closed as an FRD. Okay, now FRDs do fail. Those of you who have the playbook and the rule book, we have failed signals. Now a failed signal, okay, is a correction pattern. The market is not yet ready to give us a fresh ready dump to the downside, okay, after making lower lows. Now there are rules we want to see that signifies that a FRD has failed. Okay, we had that type of pattern on the Euro Swiss franc. You can see that Euro Swiss franc it closed as an FRD, okay, but also an inside day. Now you can see what happened here. The market broke out, bounced off, and gave us a false break reversal of the inside day. So an inside day signal must be traded per the definition. Okay, what is an inside day? An inside day is a setup for a false break reversal or trend continuation trade. So we had a false break reversals coming off from the higher time frame moving average, making higher highs. Now those of you who try to go short on this day, thinking is a first ready, rethink it. Do not trade against the moving average. Okay, we had some very good opportunities on the USD card. Now when we talk about front side, backside, backside, okay, how everybody sees this, how they want to see it, is not how I see it. Now front side, backside, the backside of the week can blow off in the direction of the trend. It's not every time the backside will reverse. Okay, what do we need to see that makes us certain that on the backside of the week the market will continue in the direction of the trend? We saw that on the Aussie Swiss franc, where I was buying Aussie Swiss franc. I sent that signal instead of selling, okay, because it's not every time that the backside will reverse. Okay, make sure you look at the opening hour and price action breakout PDF on WAP. And for those of you who have them, I am still updating that PDF. I want you guys to really understand how I look at these things, the little breakouts, and the very important rules of not trading against the moving average. But the markets go with you 1% better every single day. See you guys on the next one. Do well to like and share this video. Thank you guys for watching me. Thank you for liking. Thank you for sharing. I appreciate you guys. Much love.